Hi Forex traders, welcome back. This is Charis Trading Institute, and today we are going to look at the dollar analysis versus the GBPUSD Forex commentary. So as usual, we understand that the higher time frames are the main drivers of price action, and so we would like to go on the higher time frame to do our technical analysis so as to identify institutional order flow of the higher time frames, because that is where the institutions exert their interest and their pressure, and the higher time frames are the main draw on liquidity. Okay, so we are going to go to the higher time frames and see where the dollar is heading and inversely correlate that with the GBPUSD, and you can do that on any other foreign currency, okay, because the dollar literally affects almost every asset in the world. So this is the dollar weekly time frame. As you can see, previously price raided the sell side liquidity residing below this previous old low and traded into our buy side imbalance and a sell side inefficiency by the left here. So price traded into that after taking out sell side liquidity, and we see an impulse swing to the upside. Price has also formed a swing low here, okay, and in the last 3 weeks we see a bullish institutional order flow, because we see the willingness of the weekly candles to constantly take out previous old highs. You can see the previous 2 weeks high has been raided through by this candle. Then we see the next candle previous week took out the previous weekly candle, the high of the previous weekly candle. So we have price creating a new impulse expansion to the So we see price creating a new impulse or expansion to the upside, also creating a new fair value gap, which is going to serve as our internal range liquidity. The low of this candle to the high of this candle, this gap in between is called the fair value gap. Okay, so this was where we were looking at starting the week, and yesterday during the CPI news event, the CPI pushed price into that internal range liquidity after a sell side raid on the daily time frame. Okay, it was an internal liquidity grab or sell side raid into that weekly internal range liquidity, which is the fair value gap. So the dollar is currently bullish. Where is the dollar going to go? We expect the dollar to take out the previous weekly high, which is buy side liquidity residing above it, and the buy side liquidity residing above the previous 20-day high of the higher of the daily time frame. Okay, so let's go down to the daily time frame as well to have a picture of where the dollar is going to. Okay, so this is the daily time frame. You can see that price, after taking out the liquidity, we had a shifting market structure. Okay, we had a shifting market structure and price created a breaker block. This is a breaker block. Why is it a breaker? Because price had formed a lower low before the shift of market structure. So this is a bullish breaker block, right? Now you can see here that in between that weekly fair value gap is an old low, telling us that there is a pool of sell side liquidity residing here. So price went into the sell side liquidity residing below that old low and found support at a breaker block, or you can see the last buy candle by the left, the last bullish candle here by the left before price broke this structure was where the institutions went to paired up their long orders. So this is breaker block, or the wick of this candle, whichever one you choose, it's a breaker block. Okay, so now the dollar has resumed bullishness. So where is the dollar going to head into? The dollar is heading towards the buy side liquidity residing above this old high. Remember, we said the buy side liquidity resides above an old high or relative equal highs, right? So the relative equal highs of the body of the candles here and old high. Again, I can see the dollar trading into 50% of the bearish order block mean threshold here, which is this line you see here. It is 50% of this order block. It is called the order block mean threshold. And as well, the dollar can head into buy side liquidity residing above previous 20 days high. Okay, there's something called the look back and cast forward analysis. So this is my look back and cast forward analysis of where price is likely going to go into the next 20, 40 and 60 days, the price will likely take out the buy side liquidity residing above previous old highs or old lows. If we are bearish, if we are bullish, price is likely to take the old highs of the last 20, 40 and 20 days. Okay, so this is the old highs of the last 20 days, and above it is also another fair value gap, or you can call it the sell side imbalance and the buy side inefficiency, and this is also a bearish order block. So remember, a bearish order block that has a fair value gap is high probability. This is the draw on liquidity on the higher time frame. For the dollar, if the dollar is still going to exert a bullish pressure, I'm still looking at it trading into the 60-day high as outlined here. Okay, so but short term we are looking at the dollar trading into that 20 days high, right? So let's go to GBPUSD and do the same analysis, or let's analyze the 1 hour time frame of the dollar as well to see what we are looking at intraday today. So this is today's price action. The dollar had created an expansion today. Okay, dollar had broken structure, and I'm looking to see the dollar trade into an internal range liquidity, okay, which could be this. This is actually a 4-hour fair value gap. Let me show you. This is a 4-hour fair value gap and a bullish order block, right? The dollar can trade into this. I'm looking to see it trade into this before we attack the buy side liquidity residing above here. Or the dollar may as well find support at the 1 hour internal range liquidity, as it is already reacting off right now. Also because I can see that there is a volume imbalance right here. What's that volume imbalance? You can see here the price action here, it's only between the wicks, not the body of the candle, right? So this is volume imbalance, okay, where you see only the wicks crossing each other without the body of the candles. That is a volume imbalance. So the dollar can continue bullish from this very point, or it might head downwards into that point of interest. Let's see the GBPUSD, my favorite currency pair, and let's see what we're anticipating on the daily time frame. Or as well, let's do that analysis. Sorry, my chart is looking very messy today. Don't worry about that, okay? So this is the weekly time frame of GBPUSD. After trading into an institutional order flow entry drill, we see an expansion or smart money reversal to the downside, creating a bearish order block that has a fair value gap. So when the week began, I was looking to see GBPUSD trade into this point of interest before we start to go down and attack sell side liquidity residing below this old low, and the fair value gap here, or the buy side imbalance, sell side inefficiency. Going into the daily time frame, we can see the same thing. Okay, beginning the week, the GBPUSD traded off this volume imbalance on the left that was violated. When such happens and price returns to it, this will serve as support turn or resistance turn support. Okay, so this was supposed to be a resistance for price action to go down, but price violated it, returned into it on Sunday and Monday, and then this was the catalyst into the weekly bearish order block and a fair value gap on the daily time frame. This tiny fair value gap, once you see that in price action, pay attention to it. So yesterday during CPI price, there was an injection of liquidity into that point of interest, and we started to short from this point, and we are going to attack the sell side liquidity residing below this low, and we should head for this buy side imbalance and the sell side inefficiency downwards. This is what I'm looking at on the GBPUSD. Okay, so let's go down to the 1 hour time frame, see what we are going to do today. This is the 1 hour time frame, and as you can see, price has created bearish market structure. Currently there is a shifting market structure, and I'm looking to see price trade into internal range liquidity. Remember what our internal range liquidity is: fair value gap, order blocks. So this is premium. However, price can tap into this. However, price can just continue to the downside because we see the dollar finding support at a volume imbalance of the 1 hour time frame, right? So price can continue downwards because there is a heavy sell pressure on foreign currencies as well. So where is the GBPUSD going to go into? Intraday, I'm looking at it attacking this sell side liquidity, this sell side liquidity. That's what I'm looking at. So on the 5 minutes time frame also, I'm seeing a smart money divergence. Okay, what is that SMT divergence? Let me show you here. This is the dollar. Let's go to the 5 minutes time frame. You can see here that the dollar had formed a lower low and is finding support at a 5 or 15 minutes breaker block. You see that price from lower low is finding support here. This is GBPUSD. Price is failing to form a higher high. So this is smart money divergence. We might just see GBPUSD push to the downside from here. So guys, this is my analysis on the dollar and GBPUSD. If you like my analysis, I'd like you to like my video. I'd like you to subscribe to this channel. You can share to community of traders, invite other young trader, beginner trader, intermediate traders to come learn on this channel. And if you like to join my VIP Forex training and mentorship, you can go to the description of this video and reach out to me via the link, and you can as well join my free Telegram community for trade setups and analysis. Until next time, I wish you good luck, good trading.